A divided Federal Reserve, concerned about tariffs, inflation, and the labor market, revealed its worries in the minutes of their July meeting. The central banker's summary showcased a range of opinions, with most agreeing that it was premature to lower interest rates. Despite the divergence, policymakers largely concurred that their current stance was appropriate. The minutes highlighted risks to both sides of the Fed's dual mandate, with a majority concerned about inflationary pressures. However, a couple of governors, Christopher Waller and Michelle Bowman, dissented, advocating for an immediate cut in the key rate. The Fed's funds rate, a benchmark for consumer rates, has been targeted between 4.25% and 4.5% since December. This was the first time in over 3 decades that multiple governors voted against a rate decision. President Trump's tariffs were a key topic of discussion, with officials noting the uncertain effects on inflation and the potential for unanchored inflation expectations. The meeting occurred against a backdrop of political tension, with varying opinions on the economy's trajectory. A staff assessment described economic growth as tepid in the first half of the year, while unemployment remained low. Participants expressed uncertainty about tariffs' impact on inflation, and some worried about cracks in the jobs market, suggesting the need for policy intervention. The minutes highlighted the potential trade-offs the Fed might face if inflation persisted while the labor market outlook weakened. Decisions on rates would depend on the variable's proximity to the Fed's goals and the anticipated time horizons for closing those gaps. Just 2 days before the meeting, the Bureau of Labor Statistics released data showing weak non-farm payrolls growth in July, with June and May figures also revised downward. Even without this data, Fed officials acknowledged a meaningful increase in employment downside risks due to slowing economic activity and consumer spending. The minutes release preceded Chair Jerome Powell's keynote address at the Fed's annual symposium in Jackson Hole, Wyoming. Powell is expected to provide insights into the Fed's short-term rate direction and its long-term policy outlook. Trump has exerted intense political pressure on the Fed to cut rates, berating Powell and the board. With the resignation of Governor Adriana Kugler, Trump gains the opportunity to appoint another candidate of his choice. Powell's term as chair ends in May 2026, but he can remain as governor until 2028. Trump has also demanded the resignation of Governor Lisa Cook amid mortgage fraud allegations. The White House has identified 11 potential candidates for the Powell seat, including current and past Fed officials, economists, and Wall Street strategists.